It's about that time of day again, folks. 7:30 a.m. Eastern Time, Monday through Friday. Welcome back to our morning prep. We're looking at crude oil futures this morning, and we're going from the screen to the floor. I'm here in Los Angeles. My name is Joseph. I'm with schooloftrade.com. I'm a technical analyst, and I'm going to be providing a top-down approach this morning, and I'm going to try to anticipate the direction at the open, looking for high percentage trading opportunities starting at 8 a.m. Now, if you've been watching our broadcast, we've been very accurate in that 8 till 10:30 range in the morning trading session of crude oil futures. And so this morning, I'm going to start with a top-down approach, starting with a daily chart, hourly charts, all the way down to a 5-minute chart, and we're going to anticipate where that first few trades are going to be today. That's all we can do. We know that things change quickly as news comes out, and of course, today being Wednesday, we will talk about crude oil inventories. Once I'm done with the mic, I'll pass it all the way over. We'll go from Los Angeles all the way across the country to New York City to the NYMEX exchange, where we've got Marty Errico from Traders Audio. He's going to be analyzing the pit this morning. And Marty's got some incredible insight that we can't get from our screens in our home offices. This is a very unique way of preparing every morning for the market, moving from the screen to the floor. Let's get started now. I've got charts loaded up. I'm going to post all of these charts right up on the blog here later on after the call is done. And I first want to start using a top-down approach with a daily chart. Now, kids, remember, these daily charts are not being used to take trades. These daily charts are only being used to set the stage, to tell the story. Here's what's happened over the past few months. Here's what's happened leading up to what's happening right now. I always use the analogy of a daily chart is a bird's eye view. Think about a helicopter picking you up on the street, taking you up a couple hundred feet, and now you can see all that you need, right? It's a bird's eye view. And what does this bird's eye view tell us this morning? Well, if you've been watching our broadcast consistently the past week and a half, you've heard, as we've talked about, this sideways trading range. And this sideways trading range that we saw at the highs of this price wedge was easy to find. And now that we've seen big, bold candlesticks moving below, now we have reason to believe that two things have occurred. One, the highs of this price wedge have held as major resistance. In other words, there is enough supply entering the market at the highs of this wedge to satisfy and exceed the demand. Two, we also know now that we have broken and closed below this sideways range, which means now the balance that we saw earlier on in the week has now shifted to the downside. Balance is very important to remember, folks, because sideways trading ranges are a very clear sign of markets being in balance. Being in balance means that the buyers and sellers have agreed that this is a fair market value, right? This price is a fair value. Now we can see here that for whatever reason, we as day traders don't really try to know why, we just try to know when. We know that for whatever reason, the market personality, the market participants have deemed this price being too expensive. So we have a big, big clue here. What's the biggest clue on this daily chart? This big, full-bodied red candlestick. That's the biggest clue. That tells me sellers are in full control this morning. If we had any questions about whether or not those buyers were going to try to grab it and bring it back up, we've of course silenced those questions. Now with the sellers in charge, the daily chart shows us a key level here. We've got two key levels, 93.44, and we've got 92.65. These levels are going to be very important later on today. As we go lower, a break below 92.65 is going to get the party started. We know the daily traders are going to be watching this 92.65. If we can push below 92.65, we are going to see a ton of selling pressure enter the market. Now, if we see a candle close tonight below 92.65, we can pretty much put our money on the fact that we're heading lower now to 90.50 area. What if we use that 93.44? If price was to bounce back higher, because after all, this trigger zone is considered a buy zone, there will be demand entering the market at this trigger zone support. So if price bounces back up, a rise back above 93.44, we're going to be very bullish. In fact, a candlestick that closes above 93.44 on the daily chart means we are wide open now for the buyers to bring it right back up and retest those highs again. So keep in mind, intraday traders, a break below 92.65, a close below 92.65, and we are bearish down to 90.53. A close back above 93.44, and we are bullish now, and the door is wide open to head back up to 96. Daily chart tells us the sellers are in complete control right now, and it tells us that below 92.65, we're going to begin looking for selling opportunities. Now, this just sets the stage, though. We need to figure out a little bit more important clues from some faster time frames. Let's drill down. We move now to a 4-hour chart, a 240-minute chart. And we have a couple more important clues here. In fact, there are two very important clues on this 4-hour chart. If you look closely, you can see that we've broken that price wedge. And that price wedge we were relatively concerned about, that it might get us sucked into, right, this price wedge. And of course, we have to wait for it to break out to the upside or the downside. But that, of course, didn't occur. We did tumble lower here overnight. I was talking to Marty about this before the call this morning, talking about the news inventories that came out last night being larger than expected, so more supply in the market and prices dropped. Now we have this big clue here. First clue, notice the big bear channel. This bear channel tells us that we are sitting at support. Now remember, trading around the lows of a bear channel are always going to be a little bit tricky. It's going to be a little bit tricky for us not to fall victim trying to sell too early, because we know that the price is moving lower, but it oftentimes gets caught up at the lows of these channels. Now, this is a bear channel, so the high percentage trade will be waiting to sell the highs of that bear channel. Just like we traded buying the lows of the bull channel yesterday, we of course can buy or can sell the highs of a bear channel. Bottom line, the first clue we see here this morning is we've got support at the lows of the channel. The second clue we see this morning, we have the trigger zone. If you draw your Fibonacci levels from your major swing low at 90.11 all the way up to 97.01, you'll see we have what we used as a profit target last week. If you were watching the broadcast last week, we talked about how we were going to be selling short down to that Fibonacci-based trigger zone. Well, that happened last week, and you can see a big close above that trigger zone. What does that tell you here? That tells us now that clearly the first test was a failure. Second test, now we've buried right into it, and we can see here there's a very similar level. Remember the daily chart? The daily chart told us 92.65. Now we're seeing some confluence. So 92.65 is just below that 92.79, and that's going to be another clue we get off the 4-hour. So what is this telling us? This is telling us that we are still ripe for a bounce, even though we do have the sellers appear to be in complete control. I'm expecting here a possible short-term price reversal to go back higher, but I am expecting, though, this price to continue to move lower this morning, especially since we have important news coming out regarding crude oil inventories today. And let's not forget, today's Wacky Wednesday. The third Friday of every month is OPEX. This is the Wednesday of OPEX. This is Wacky Wednesday. So a drop in prices is expected in the long term today, but I will be keeping my eyes peeled for short-term buying opportunities. Let's go back to the 60-minute chart. Here's a 60-minute chart, and what a great example this one is to why we have to be aware that we may get the bottom to fall out of this thing. And if we do, we've got this huge wide open space down here. Look at the size of this wide open space we have on the 60-minute chart. Now, given we still got to get below that 65, which we saw on the daily chart. Once we get below 65, the blood's in the water, and we should be able to see this thing tumble pretty darn quick. So there's 65 right there. There's going to be your reversal zone right here, right? So we're literally sitting right on top of that reversal zone. Get me below that 92.65, and we can see a nice big wide open space down to 91.47. Again, I will be looking at the lows of this bear channel. You can see we've got a bear channel marked up on this 60-minute chart as well. At the lows of this bear channel, we must be expecting at least a little bit of demand entering the market. And considering the fact that we have the daily level, the 4-hour level here at 92.65, this just again confirms that we will expect to see a small bounce off these lows. The market personality, the tape, the price action will tell us how far this bounce will go. Now, let's drill down one more layer, because when we go a little bit faster, now we open up the overnight trading session, and now we open up what we call the VIP chart. The VIP chart is an extremely valuable chart. As you've seen in the past few broadcasts, we are extremely accurate with this. I get big clues from looking at what happened between 3 a.m. and 7 a.m. I'm going to use a few things on this VIP chart. First of all, everything has to do with London's trading session. London highs and London lows. And you can see I've marked that up here with this silver range, right? That's going to be London highs to London's lows. Now, you've probably heard me say a million times before, I'm always going to look to buy the London lows, take profit at London highs. Back up at the highs, I'll look to sell London highs and take profit at London lows. What's the rule, though? The rule is, as soon as I get a break and a close below this reversal zone, in this case 93.09, we're expecting price to keep falling, in this case down to 92.86. What's happening here, though, is very interesting, because we are seeing the other anchor charts, right? We're seeing that low of that channel. We're seeing other influence, right? We're seeing other slower time frames start to influence this 5-minute chart. And I'll tell you right now, it does look like we are going to get that failure to the downside and get that pop back up. And I'm expecting price to rise now all the way back up to that 94 even area. Now, we will be able to see a clue out of Fibonacci. We should be able to get a trigger zone here. Partial profit target 93.40. So 93.40 is going to be a partial profit target for me on the buy back in. 93.40, that's going to make, I didn't want to go and write that down because price was dropping earlier this morning. So now that we've seen that drop, there we go. I'm going to buy the reversal zone lows, right? We'll buy those reversal zone lows. I'll take a partial profit target at 93.40, just like we did yesterday. If you were watching it yesterday, we took a partial profit target right in the middle of that range. We never got the full target filled. So partial profit target, 93.40. I'm looking for a close here now, back above 93.09. A 5-minute candle closing back above 93.09. I will get long here. Partial profit target, 93.40. Runner target, 94 even, all the way back at the highs, and we will repeat. Look to see a failure at the highs, a close back below 94.09. I'm looking to get short, and I'll bring it right back down. Now, like I said yesterday, if I happen to be wrong on this, we are in a very difficult spot between this London support zone, this reversal zone here. I'm looking for a close now below 92.86. And again, we know that a close below 92.86 will still have to break through that 65 that we saw on the daily chart. So don't forget to take a little bit of profit. I will be taking partial profit targets off at 92.65 on the way down, right? Because that's the daily chart level. Okay, 92.65. All right, guys, we got a good plan here this morning. Long-term selling opportunities, short-term buying opportunities. Be careful in this area here, folks, because we definitely can see here, unless this personality starts to take off to the downside, we can almost guarantee we're going to get a little bit of a bounce here on the way down. We should bounce off London 2. We should bounce off 92.65. So I will be selling short, looking for small nickels and dimes, little partial profit targets on our way down to this London -3. 92.10. 92.10 is my final seller's target this morning. 92.10, my final seller target this morning. I'll be right there with you, Miles. Good question. Is the -2 an SD of the trading range? Yes, it is. Yep, good question there, Miles. The London -2, the London -3, and the London reversal zones are all specific calculations of that London trading zone. Absolutely, Miles. Great question. And Miles, don't forget to come out and see me in our live trade room, and I'll be happy to share with you more of that. That's it for me here. Short-term buying opportunities, long-term selling opportunities. Once again, a technical analysis approach here this morning. moving all the way from a daily all the way down to a minute chart. I'm going to post these charts and my guidance up on the blog for you guys here in just a moment. Now, we've done a great job here at prepping with the charts. Now let's go across the continent. Let's go over to the NYMEX exchange. Marty's got some very unique analysis for us directly from the pit. Marty, thanks for joining us here today. Take it from here, my friend.
Alrighty, thank you very much, Joseph. Good morning to you now. Alrighty, so let's start by taking a look at this news that we had overnight. Forecast for the news that we're having at 10:30 and the rest of the news scheduled for release. Again, we have a lot of economic data scheduled for release today. We started them off with MBA purchase applications early this morning at 7 a.m. Came in below expectations, negative 7.4%. Well, we have just, let me run through the list real quick. We have Producer Price Index 8:30 along with Empire State Manufacturing 8:30. 9 a.m. I got Treasury International Capital, 9:15 Industrial Production. 10 a.m. I got a couple pieces of data as well. I got Housing Market Index and I got E-commerce Retail Sales. And then the most important one that we're looking for is our Petroleum Status Report. That's at 10:30. So late last night, after the trading session ended, we had our crude oil inventory numbers come out. We had the API numbers hit the board last night. The reason why for the big sell-off here today is because of the inventory number. Again, we hit the board. We get 1.1 million was the build. We got a 1.1 million barrel build in the API numbers last night. Also, what we saw last night was Cushing, Oklahoma shows its first build in a long time here. Cushing, Oklahoma comes in with a 450,000 barrel build. 550,000 barrel build. Again, that's a 500,050 barrel build. So again, 550,000 we get on the build side for Cushing, Oklahoma. We haven't seen a build in Cushing for a long time, so this is going to be very bearish for crude, as you can see the reaction from the overnight session. All right, let's look at RBOB here. RBOB comes in with the draw of 480,000. Distillate heating oil, it shows a 1.9 million barrel build. So overall bearish report, with the exception of RBOB gasoline just showing it's just a little bit of a draw, but nothing big, very, very small in terms of the draw that we got. And we are coming into the summer driving season, so we should be looking for draws. It would be healthy to get draws. All right, so forecast for today's numbers, the all-important numbers for today. We're looking at 330,000 barrel build for crude oil. We're looking at between 330,000 to 500,000. So again, one more time here, 330,000 barrel to 500,000 barrel build is what we are looking for today in the number. For your RBOB, we're looking for draw 780,000, and for your distillates, we're looking for 800,000. So that's it. Those are all our news that we're looking for. Now let's start by taking a look here at risk on, risk sentiment. So far this morning, I got risk on sentiment here. We got your dollar trading higher today so far this morning. Again, we have your risk on sentiment with your dollar and bonds trading higher here this morning. As you can see here down below, we're going to go look at our current differential, and we have on the currency differential risk on, risk off sentiment, dollar higher, euro, cable, Canadian all lower. We have your yen kind of sideways. Bonds here now, trader, and your LIBOR as well trading high. So again, we have a risk on sentiment. Again, last print on the dollar, I'll give you that one. 84.13 even, big time here, 84 handle. We're talking big rip up in the dollar. As we look at our supporting markets, we're looking at a multiple market divergence early this morning, and I got your crude trading lower here by about $1.25 today, 93.04. Again, remember we were talking about 93.37 yesterday, which we break and fall below. So that's a big indication here for us to trade lower. Again, we're going to be watching, we're going to go over levels as well, but we're going to be watching here that inventory number at 10:30 to give us that indication. Again, I try to look at the whole day. I like to stretch it out and look at the whole day and give you guys a game plan of attack for the whole day. And we're also looking at your RBOB gasoline. Again, that's actually the only one with the exception being higher, but only by about a couple ticks. We're basically unchanged on the overnight session, and it makes sense because we did have a draw on inventories last night. So RBOB trades 283.78. Looks like here it's all about the RBOB, all about the Brent, heating oil, and crude today. All multiple market divergence. Looks like here we have crude actually leading the way lower with your heating oil following suit in Brent. So we're talking about now your heating oil, diesel fuel, 285.36 last print. We're down about 2 pennies on the day. Let's also look at your Brent here. Brent trading 102.23. That's also lower here, and again, it's following crude lower. We're going to get now to your volatility. Big story in the overnight besides this build in inventories. We have vol extremely bid today. Again, volatility gets the bid 30% in vol right now. I got implied volatility sitting at about 30%. I have implied vol, that's in the June and July contract. I have it sitting at just about 26%. So again, we're firm in the mid and back months. All right, I'm looking at your RBOB gasoline volatility, just about 21% or so, and your heating oil vol, just about 17.25%. So we look at the Brent WTI spread. We look at our supply-demand differentials. We're looking at our spreads right here, and our spreads are giving us that screaming sell. Right now, we're looking at your Brent WTI spread backwardation big time. We're talking about 9.15. Yesterday, we were trading in the low $7 handle, so you can see the incredible backwardation that we had from yesterday's trade into now the overnight session. I'm talking about 9.14 on the spread, big backwardation. We're looking down at your calendar spreads now. Calendar spreads are giving us here another more backwardation here. I'm looking at your June-July spread about 25 cents. June to Augie, 34 cents. And June to Sep, 15 cents. So huge backwardation in these spreads. I mean, especially in that June Augie and June Sep. So big time backwardation causing us to trade lower. Again, spreads are higher this morning, indicating crude trades lower. So we're going to have to keep an eye on them around the opening bell, see if we get any more backwardation. I'm looking at your crack values here. We go down a step further. We look at our crack and swap values. I got 87, 40, 15, 87 handle, equivalent to crude into the 92 handle to 93 handle. So again, we're in the 93 handle, drifting down to the 92 handle. So you can see that is giving us that indication lower as well. Again, we're pretty much here. We break our wedge to the downside, and now we're trading even lower. So this is kind of an indication here that we're going to be in anticipation numbers. Of course, we can see price bounce a bit to the upside in anticipation of numbers. We'll probably buy them up just a bit. And then we'll just start to watch how the guys in the pit are starting to position themselves before the number. Again, these guys down on the trading floor, they tend to position themselves before the number, not necessarily trade the reaction of the number. And when they do trade the reaction of the number, they're getting it at around 11 o'clock. So the thing is, the key is here, we're going to see how they position themselves beforehand. So again, they'll probably buy them up just a bit so they can get a good price to sell them at. So that's what we can expect to see early morning. So let's now proceed on. Let's talk about options expiration tomorrow at 2:30. They expire the options. So the June options will be expired again tomorrow at 2:30. And then in about 6 days, we're going to have the outright expiration. Now, we talked about yesterday, rolling in the pit, right? Yes, we're going to get to those levels in just a second. We'll put that level chart up right now. So we're looking at expiration in the pit. Again, we're looking at the roll in the pit as we talked about yesterday. And right now, it was the 10th business day of the month yesterday. In June and July, it's the 10th business day of the month. So we start to watch the pit start to roll their contracts. So that's another thing that kind of caused the late day sell-off. Again, they're rolling here their positions. And again, we're going to continue to see that where they're getting rid of Junes and they're getting in July. And they're even getting into Augie, so they're starting to just really position themselves here into the outer months. So we're going to be continuing to watch the roll here in the pit. Again, we saw big paper participation to the downside yesterday. They get in a net short position, so we've been watching that. Locals basically balance out their positions by the end of the day. We saw a lot of selling in the pit towards the end of the day, and then they come in around that 2:30 time frame and cover. But dealers are still short. Again, we have big dealers still taking short positions. We saw a lot of interest in the 95 even put, and all the way down into the 90 level. Again, we talked about $90 and $92 being our next big levels of support, some nice profit targets. And we saw besides all those puts coming into the market, we saw the 90 call purchased about 2,000, traded about 2,000 times in the pit. The 92 call gets traded about 3,000 times in the pit. We also saw the 92 half to 94 half straddle, and we saw a lot of interest down into the 90 even call. So, all right, let's talk about levels here now, ladies and gentlemen, here this morning. Again, we're looking at your levels here from yesterday's pit session. Ladies and gentlemen, at a high, yesterday's pit session, again, we're going to be looking at that pH there. High, previous high, 95.23, your low, 93.85. Again, I got your daily pivot today, 94.41, which we are trading below right now. Resistance above here, I got some resistance above here, 94.97, 95.79, and 97.17. I got some support down below here, 93.59, which we already exceed, 93.03, which we're stuck up on right now, and 91.65, and that all-important $92 level is what we want to watch. Let's talk about yesterday's settlement number. We settled yesterday's pit session at 94.16. Open interest currently stands 160,081. That's a bit higher from yesterday's 150,000. So again, we're a bit higher in open interest, indicating shorts are in the market. But you have to also take a look at the open interest here in your. That's why I mentioned open interest and volatility for in the July contract. We're looking at July contract, and we have the open interest at 293,377. Big time, almost 300,000 guys. So that's huge. And that implied volatility at 25%. All right, implied volatility in the front month June here. We got 30% implied vol. The OVX bid up to 24.12 yesterday, and again, when we open at 9:30 for the OVX, we will see that probably trade higher. We talked about the big options orders. We just talked about them about a minute ago, and that's about it for your crude. Again, we're going to be watching out for those levels. We're going to be watching out for some downside activity. Again, expect a little bounce here this morning. Expect a little bit of a bid here in the morning, and then we'll watch what the reaction to the number. Again, we have to see if we can get a huge draw, but the leading indication on the API numbers are giving us a bearish-like sentiment. Again, API numbers giving us a bearish-like sentiment. All right, let's talk about natural gas here. Again, we had a nice day in natty gas yesterday, and we did see a decent trading range overall. We'll talk about that in just a second here. So natural gas right now here, currently trading now 403.60 above yesterday's high, and catching a little bit of a bid here in your early morning session. So we're going to keep our eyes and try to realize that natural gas could potentially break out above the 407 and 410 level, and then once we get above them, we'll see that 420 a lot of traders looking for. So we're looking for a break above 407, 410, get us up to 420. And that may not happen all today, but we're going to be looking into that as tomorrow's inventory. So levels in natural gas we want to watch out for. I had a high yesterday, pit session high at 402.80. Your pit session low, 397 even. We had a net change yesterday. Well, we had a close and settle at 402 even, net change of 5 cents higher. We had about a 6-cent trading range. Today I have your daily pivot at 406. 4 even 06, so that's 4 even 60. As we talked about a 6-cent trading range yesterday. No break even for gamma scalpers. It was just pure vol being bid. Again, our settlement number yesterday was about 402 even. We have some implied volatility of just about 34%, 34.5 in the vol index. Talking about open interest currently stands 155,080. We're going to be looking at the fact that our outer month volatility is also giving us just a bit of a bid as well here. Outer month volatility in the high 200,000s. I'll get that for you in just a second. We have volatility, open interest in July, giving us 257,511. Alrighty, now let's rock and roll here. Let's take a look at some levels here. I got some resistance above at 404.20, which we're kind of up on right now. Again, we just surpassed that level here of resistance. More resistance above 406.40 and 412.20, and then ultimately that 420 even. Support down below, ladies and gentlemen. We have the lower day from yesterday, 397. I got 398.40, 394.80, and 389 even. Big options trades in the pit. They buy the 405 call. They buy the 410 call. So a lot of interest here, 405 and 410. They buy those calls. Ultimately, starting to get a little bit of put activity there, a little bit of profit taking around the 420. And believe it or not, they still have interest below 430. 390. They still have interest below 390 all the way down to 360. So if we do decides to break below that 390 and say we get some type of build in inventories tomorrow, easily we can see us trade below 390 and get down to around the 360 level. So that's all I got here, the guys down on the trading floor here again. So we're going to be looking for crude, a little bit of a bounce possibly here, and then we're going to be watching for those inventory numbers, all important inventory numbers. We have our indication from early this morning giving us that lower-like sentiment. Let's see where our opening print is this morning. We'll see where our range is, and we're going to rock and roll again. I'll see you guys at 50 in just about an hour here, just a little bit under an hour, inside of an hour. Again, I got our gold and precious metal futures products opening up in just about 18 minutes, and then your crude oil pit session open in 58 minutes. All righty, guys, rock and roll.
Thanks so much, Marty. As always, very, very good analysis. Thank you so much. We appreciate that. Guys, such a unique way of beginning on charts and then hearing what Marty is seeing from the pit. To hear him confirm a lot of what we're already talking about is really powerful stuff. As you know, as traders, we're looking for something that doesn't make sense, right? We're looking for that time when we come in, we look at our charts, and we go, that doesn't look right, right? That doesn't look right. And consistently watching the same charts every day, consistently looking at the same material every day, and consistently listening to what Marty has to say every morning, I think to be a very good value in my trading career, and I hope you guys see it as well. As you can see here right now, looking at the VIP chart on crude oil, we are just back above that London lows. I have entered my long position at this point, and I'm going to be taking my profit target off here now over here at your, let's see here, 93.40. So 93.40 partial profit target, 94 even, got your runner target all the way up there. We should be able to get that partial target filled here, and of course we're going to stop there below 92.86. 92.86. All right, guys. As we said earlier, we're looking for short-term buying opportunities, long-term selling opportunities, almost a carbon copy of what we saw yesterday. Remember, everybody, we have a live trade room opened up every morning with School of Trade. Marty has a broadcast every morning with Traders Audio. Come out and join me in the live trade room. We'll trade crude. We'll trade all the big four we love to trade every morning. And don't forget to log in and listen to Jeffrey, Marty, and the rest of the Traders Audio team in the NYMEX pit. They do a great job every day with that broadcast starting at 8:50 a.m. Eastern Time. As always, my name is JJ. I'm from School of Trade. That was Marty from Traders Audio. Thank you so much for coming in and joining us here today. You can check the blog right now for all the charts. They have been updated for you. So you've got your plan of attack in front of you. And we'll catch you guys here 23 hours and 30 minutes from now back here at 7:30 a.m. We'll catch you guys tomorrow for a Thursday OPEX morning prep. Have a good one out there. Remember to learn it so you can earn it. And we'll catch you guys tomorrow. Adios, amigos. Bye-bye for now.